Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway here from verifiedinvesting.com. And of course, we're going to cover the key data points, the technical analysis of the overall markets, the crypto markets, the stock market, as well as the commodity markets, even looking at a couple unique things today. We have some big movers in the market. CRM, which is Salesforce.com, surging huge amounts today, and we'll look at that. But I have a key technical level I'm looking to short, and I'll show you why based on chart analysis. We also have Okta as well as Marvell Technologies. Those three alone are helping get technology off the mat today and pushing the overall markets higher. So again, we've had a couple very light volume days so far this week following the Thanksgiving weekend. Now again, markets are looking to push higher today. The S&P may be moving towards that $6,100 price target. And again, we'll look at the S&P chart in just a second. All right, so let's go into the charts now and see what we have. If we flip over to the charts, we did get jobs data out this morning. ADP private sector employment coming in at 146,000 versus 166,000 forecast. So it was a little bit weaker. Now notice how the markets, even after that number, have trended slightly higher on the 10-minute chart of the S&P. The reason for that is very simple, is that this slightly weaker number is just enough to basically guarantee a 25 basis point cut at the December 18th meeting of the Federal Reserve. So again, notice how the data is not so weak that everyone's panicking. It's not like we look at this data and say, oh my goodness, we're heading into a recession next month. If anything, it's just a little bit weak, enough to justify from the Federal Reserve a 25 basis point cut in December. Now, remember, on Friday, we will get that data point on the non-farm payrolls. Again, non-farm payrolls will come out on Friday with the unemployment report. That's really the major economic number of the week, right? ADP private sector is kind of a tell of what it likely will be. But again, that number on Friday will be the big market mover of the week in terms of economic data. All right, so that's what we have there. Jerome Powell speaks today, so watch for that. That's later today. So again, I don't have an exact time on that, but it is a little bit later in the day. This will be his last speech before the Fed decision on the 18th of December. So again, he will likely to basically choreograph or give the markets exactly what they need to know in terms of a cut or no cut. But again, based on the data today, you would assume that there will be a 25 basis point cut and then a pause in January. France is nearing a debt crisis, folks. Pretty wild stuff going on over there. As again, this is really remarkable because I do worry that maybe this is showing us what could be in store for the US at some point. So in France, and just to give a summary of what's going on here, is that essentially the head of France right now is saying, hey, we have to cut our debt. We have to cut our spending. And so instead of going from 6% of GDP, which is what they're spending now, which is a crazy amount, they're trying to cut it to 5% of GDP. So like literally in the scheme of things, they're trying to cut ever so little bit off of the spending. And it's causing this massive uproar in parliament, in everything over there in France, to the point where they're basically going to get rid of the prime minister and have to go back and have new elections. But it just shows you how hard it is to cut spending. I mean, we all talk about it and we all hope it happens here in the US because we know the spending in the government's out of control, like crazy spending. But at the same time, are you all ready for it? Like, are we ready? All right. Are you ready to see the economy turn down significantly in the short term when all of a sudden the feeder tube into the economy of all this spending starts to dry up? Because again, we can all sit here and say, oh, this is going to be great. We need to cut spending. But you also have to remember that it's not just spending that, hey, this is wasted money being flushed down the toilet. I think personally, payments on interest are wasted money, but every other's payment is at least going towards something that's creating a job or that's helping the economy, continue to grow. And so all of us out there, and I'm saying this to you guys that are watching, just understand. And I'm totally for cutting, but you got to also be ready for the pain that's going to follow that if we see significant cuts. It's also why I'm very skeptical I mean, regardless, and listen, I have no affiliation either way, and I am just a very big skeptic of politicians. Doesn't matter who it is. I want to see proof. I want to see it actually happens. I want to see Elon Musk actually take control and say, okay, I want to cut X, Y, and Z. And then I actually want to see the government and Trump do that. I'll believe it when I see it. All right. Hopefully I'm wrong, but all right. Let's see what we have here. Markets again trending higher, right? So this is where we closed yesterday, right around 604. We're trading at around 606, so we're up about 20 on the S&P 500. Notice the after hours grind, and then the little bit of a lift right at 4 o'clock, and the continued grind up into the highs of the session. S&P 500 here, if we flip over to the daily chart, this is that trend line that we're continuing to monitor that we would think would get to that level. Based on this, if we look at this line, if we were to push up in the next, let's say, few days, the level now is slightly above 6,100. So just be understanding of that, folks. The 6,100 level was a level I called literally 2 months ago when we were trading over here, right? Thinking that, okay, well, it's going to take some time to go up. And all right, we'll tag it. We haven't tagged it yet, which means the level is slightly higher. So we may, in fact, pierce 6,100 on the S&P 500. In addition, heads up, but I was just talking to Drew, who here at Verified Investing is our guru on cycle analysis. And there is a major cycle coming up between the 15th and the 20th of December. So again, cycles are really important. It's where multiple factors are aligning in terms of time factors. And ultimately, you want to be very aware that things could get a little bit crazy right around that period, maybe dips that are then get bought up, and then the bigger sell-off comes in January. But again, with the 6,100 level or pierce of, it could really be a significant cycle top here coming up into year end into January. So again, let's keep an eye on this as we watch. I'll keep you updated on the cycles. If you're part of the ATI, Advanced Trader Insights, which is only $20 a month on Verified Investing, kind of a no-brainer, you get your weekly cycles report in that amongst about 5 to 10 other key reports, including my 3 trades of the week, the trade of the day, etc. It's really a no-brainer. All right, let's get into some other stuff here. If we look at Salesforce, look at this rip higher yesterday. Consolidation continued move up into yesterday, 8 p.m., then continued up into the day. So this is currently trading right now at around 370. Now, again, if we look at this chart, we say, okay, well, where could this ultimately go? Like, what is your upside level here? And there is a level that I was noticing. If we take this high and we connect it to this high and stretch this out, look at this, guys. And I have to actually bring the screen down a little bit so we can see. But if we do it exactly to these highs, we get around the 380 to 382 trend line. Now, what's interesting about that is we always look for coordination. If we take a trend line here and we put it through that top, look at that. We get a pivot point to a pivot point, and they coordinate at around 380 to 382. So as a technical trader of the charts, right, in the live day trading room today, I will be watching that level like a hawk, potentially looking to short Salesforce if it gets above 380. So really interesting to kind of see that level there on the charts. Again, there may be other factors too, but the point being is if you have 2 kind of levels coordinated, you're probably getting a very good resistance level, especially considering how much Salesforce.com is up on earnings. Okta surged out of the gate on earnings yesterday, then has kind of faded throughout. If we look at the chart right now, trading around $92 per share. Now, the first thing that I see when I look at this chart, right, is that you have a gap fill here at 96. Now, usually people would say, oh, this is going to be a great level at 96. It's a gap fill, right around 96.50. The problem with that is if I put a trend line in here and then we go back to the pre-market after hours data, look at this, guys. It pierced already yesterday after hours, and you literally got a $10 pullback. So what we know is when we look at technical analysis, and this is trickier with pre-market and aftermarket because you have to say, well, does it count pre-market or aftermarket? But you still have to err on the side of caution, right? So my view is that you want first hits of gap fills. And so I'm very cautious on reshorting at 96.50 because we already tagged and pulled back $10 off that level yesterday in the after hours. In fact, if you watch Trading the Close, I gave this level just before Okta came out. And boom, it went right there. I don't know if anyone took it, but that was a great trade setup. All right, so then where is it? What if it goes higher? Where is your next level on Okta? And it's pretty easy in this situation. It would be $100 pierce, probably right up here, anywhere between these 2 high pivots. These have been tagged yet. And again, it's right at that even number 100 Pierce. The other thing that's fun to do, and it sometimes doesn't play into it, but you can always do a Fibonacci retrace and look for that. And you can see just below there at around 98, you have the 618 Fibonacci level as well. All right, next up, let's go to Marvell. Marvell Technologies here, surging higher on the back. And by the way, you can very clearly see why we have such good price action today in technology stocks, in the NASDAQ, even in the S&P. You know, a lot of times when we get these earnings out, you know, it's a mixed bag. You have some stocks down, some stocks up. Today, it's very clear that the three biggest reports coming from technology stocks were good, and the stocks are responding in kind. Okay, so again, we're trading at around 110. Now, this is trickier. It took me a little while. I was doing this in my morning video to members of Smart Money Stocks and saying, okay, well, my man, you're at all-time highs trading up here, right, at 110. So how the heck do you find a level up here? Like, what do you end up doing? And one of the things that I came across here is that if we do a parallel here, and we take a parallel line, and I believe this is what I did, and bear with me if this isn't correct, but I believe this is what I was looking at. Yep. So, all right. So here we have low pivot from 2020. This was your COVID low to the lows basically of the bear market in 2022 going into 2023 on Marvell. We dragged that to the highest point in December of 2021, just before we started to head very sharply south here for the bear market. Then you have a parallel. Look at this line, 113 to 114 parallel. So what that tells me is that generally this should be a decent level of resistance on Marvell, right at that 113 to 114 level. And again, might be a good tradable level. All right, now those have been all good stocks in terms of big moves to the upside, but it's not always so rosy as we know. So let's take a look at Foot Locker here. Foot Locker is getting annihilated. Taking a look at this chart, going to the 10-minute chart here. This is your pre-market action on Foot Locker, closing at 24.20 approximately yesterday and getting as low as 19.50 here. Now, if we flip to the daily chart, we have to go out here and we say, okay, where are we here? Well, we have a level here, interestingly enough. Look at these lows right around 19.50. So we just tagged this area right here, right? Look at this. Look at those two lows right there. And then if we flip over to the 10-minute, look at that right there, and you're getting your bounce. So now listen, as a day trader, this doesn't look like a big bounce, right? But as a day trader, this is a huge bounce. You're going basically 60 cents in a matter of 30 minutes on a stock, $20 stock. It's actually a very, very good return. Now, the problem is we've already tagged that level. So per the analysis that I just gave you, we wouldn't, at least me, and I can only speak for myself, is I probably won't rebuy at that level. So we have to look lower. What's your next level? There's a little pivot right in here. See this right in here at 1855 or so? That now becomes my key trading level. Now, the question is, are there any other levels? And what we have to do here is we have to go to our bigger time frame, and we want to zoom out. And again, I'm doing this for the first time just to be clear. And I'm looking at this and I say, okay, well, you have this low here, which was your 08 low. It's your financial crisis low. If we drag that up, that's quite a bit lower. Yes, that will be a significant pivot low around 16. But again, the odds of Foot Locker getting to 16 are probably pretty low here. And then the only other thing, I'm just doing this now. There's kind of a trend line here. Yeah, that's actually not bad. All right, so yeah, look at this. So what this tells me is this area here at 1850 to about 1825 is huge, because look at this line. High pivot to high pivot to high pivot. It pierced it here. So we can see right here it pierced. But then look, exactly to that high, exactly. And then here it pierced the low. But remember, this was the COVID collapse. So obviously it was very violent. And then same thing here. But this, to me, being joined right around this 1850 to 1825 level, that looks really, really good as major trading support. Now, on a swing trade basis, would I buy it there as a swing? Probably not. I'd probably wait for this lower level here around the 16 level, the lower trend line here, for a buy as a swing trade. But as a day trade today, if it got there, yeah, I would be a player. All right, let's get into Bitcoin real quick here, guys. Bitcoin continues to kind of hover. We know MicroStrategies is still buying Bitcoin, but even with that buying pressure, it's still not pushing it over 100,000. Remember, I'm very chart-driven, data-driven, and when you look at this, this is your pivot point. As long as you stay above here, bullish bias. All right, this is all chop. In fact, I want to show you guys something. So if we look at this and we take this high, drag a trend line down here, and look, exact high to exact high to exact high. What this does is it gives us a variable trading level, meaning that if you break this trend line, which is right now around 97,800, this would be your breakout for that move through 100,000. All right. Now, listen, as a trader, you always look at both sides of the coin, right? So there's always a scenario of, okay, well, what if the pattern fails? Right now, it's a bullish pattern. How do you know if it fails? And the answer is very simple. Any daily close, especially with confirmation below this line at around 91,000, then this is all moot and you would look for further downside. But as long as you hold and don't close or confirm below here, this would be bullish. Look for the breakout of 97.8 or so. That would be your catalyst for money flow to turn heavily to the upside and rip this higher. Next up, let's look at gold today. Gold continues to form a bear flag. So again, as bullish as I am long-term on gold, we've got to be respectful of the pattern. The pattern is still an inside bar, wide range red candle, inside bar consolidation. That's bearish. Generally, you're looking for a move down. How would it be negated? Any close, daily close above this high here, this wide range red bar high, would then trigger a bullish flip and you'd look for further upside. But as long as you stay basically inside of this wide range, ugly, nasty red candle, this remains bearish, even if it continues to consolidate here. Now, we are coming into a time count, so it does favor that in the next day or so, we might see a move. Maybe that move will be on Friday with the jobs report when it hits. We'll have to watch and see. Silver today, last I checked, was under a little bit of pressure here, coming back in after a decent little up move. I wish there was more to say on silver. It's really just staying between this trend line and this trend line. So it's just a whole lot of chop. Again, it is bearish chop because, again, down move, sideways chop, that it would be ultimately bearish. So for me, I'm just staying on the sidelines. I like silver longer term. If you told me 12, 18, 24 months out, yeah, I like silver. Shorter term, 1 month out, I'd still be bearish on it just like gold until we see a better technical chart factor probability setup. All right, next up, oil had a nice move yesterday. Last I checked, it was basically flat to positive. Yep, still flat to positive on the day. Again, just to keep an eye on this here is you basically just staying and chopping sideways. This is a lot of consolidation. I can zoom out beautifully on this chart here, and we can see, again, if we really zoom out, you can see your massive flush. Then the reverse happened to the upside. This was when Russia invaded and the following ensuing major massive move up. And then we've seen this come back here, which again, if we do a fib, what's kind of interesting here is, look, is that it's basically, look, isn't this kind of crazy? So where is this? 50% retrace. So you're literally hammering on the 50% from the low here in 2020 at COVID low to the high here, 50% line. Now, again, what does that mean? Well, as long as it stays above here, it could go up. But the key kicker is if you break here, now you've violated the 50% midpoint. Now you could see that bigger move down. And that is something we have to monitor, as I've said in almost every game plan when we touched on oil, is that, yeah, right now 64, 65 is great support. But again, if this breaks, it's very ominous. And I still think you have this bigger pattern here that we broke above. At some point, we probably have to come back and retest that low. And that would be, again, and again, my saying is that, hey, listen, we all love cheaper gas, cheaper, heating, etc. But you have to ask yourself, well, where's the economy if oil's back to $35 a barrel? That's the bigger question. That's what we have to be concerned about. All right, lastly, natural gas, which last I checked continued to fall here beautifully. If we bring this up and refresh my chart, it is bouncing a little bit off the lows. Kind of came through this minor level, which wasn't a buy level, but it was just a little support. Didn't really pay much attention to it, frankly. This is a short-term aggressive buy here at 277. I might play that if it continues straight down. Otherwise, the safe, well, there's no such thing as safe in natural gas, that's for sure. That's why they call it the widowmaker. But ultimately, this down here is a major multi-factor technical support. All right, so we'll keep an eye on that. But overall, folks, there are trades out there that we can have today. I will be looking to trade them with members of the Apex Live Day Trading Room. I know a lot of you guys have joined recently. We've been on fire. It's been fantastic. So hopefully it continues. And don't forget, check out the ATI, the Advanced Trader Insights. It's an amazing, power-packed subscription for $20. $20. It gets everyone in the door. The idea is that even if you don't have a lot of money, the information, the chart analysis in there is second to none. Insider buying and selling report, an options report is in there on a weekly basis. Cycles report, my daily market report is in there. My weekly 3 trades that I put out on Saturday or Sunday for the coming week. That's a fun report for me to do as well. So it's really a no-brainer, but you guys can go find it on the website. All right. Thank you guys so much for tuning in. I'll see you bright and early tomorrow. Take care.